Hi, welcome to Simply Current Affairs. In this video, we will be doing our episode 2 of Economics Explained Initiative. So today we will be discussing about Forex Reserve. So recently, India's Forex Reserves have crossed $700 billion. This is very, very significant. This is not the first time that we are crossing $700 billion. In 2024 also, we crossed it. But the point is, in the year 1991, we were having balance of payment crisis where our forex reserves were around only $1.2 billion. But today we have more than $700 billion. This is very, very significant. So to understand this forex reserve topic in detail, we should have some conceptual clarity on topics like balance of payments, current account, capital account, import cover, and the components of forex reserve. So in this video, we will be discussing all these static, and then we will be doing why it wasn't news. Friends, if you are watching this video series for the first time, then please watch my first video where I discussed about the GST 2.0 in detail. I also explained about the basics of GST, which will be very, very effective. At the end of today's video, there will be an interesting exercise. So please watch the video till the end. So before going into the topic, these are my upcoming courses. So there will be a full-fledged economic course starting from 15th of October. There will be a full-fledged current affairs course, 75x75 starting October 11th. If you are interested, you can click the link given in the description and you can download the brochure for more information. Right. So we will start with what is balance of payments first. Balance of payments. Balance of payments. It is a systematic record of all the transactions which we do with the outside world. It is the systematic record of all the transactions which we do with the outside world. So when we say we do with the outside world, that includes the transaction made by the government and also the transaction made by the private players. So what kind of transaction which we do with the outside world? For example, we are importing something from other countries. We are exporting something to other countries. Foreigners are investing in India, or we are investing in Dubai. Medical tourism, educational tourism. Now all these are ways through which we transact with the outside world, or we borrow from America, or Sri Lanka is borrowing from India. So all these are transactions which we do with the outside world. So balance of payment is a record of all these transactions. It is something like a ledger, account book, which notes down all the transactions. Now all these transactions are recorded broadly under two headings. One is called as current account. One is called as current account, and the other one is called as capital account. So all the transactions are recorded under BOP. Under BOP, we have two headings. One is called as current account, another one is called as capital account. All those transactions which are one way in nature, all those transactions which are one way in nature will come under current account. What is it one way in nature, sir? For example, I export something for which I get money. Money comes to me. Will I give that money back? Will I pay that money back? Definitely no. So I export, I am getting money to me. The money which I received, with which the transaction gets over. So money comes once, one way. For example, I am importing something. I am importing something for which money goes outside. The money paid, will it come back? Definitely no. Once the money is paid, the transaction gets over. So all these are examples of one-way transactions. All the one-way transactions will come under current account, and all the two-way transactions, will come under capital account. What is this two-way transaction? For example, I am borrowing from America. I borrow money, I have to repay that money. The money borrowed has to be repaid. So two-way transaction. Or India is giving loan to Sri Lanka. India gives money to Sri Lanka. Sri Lanka has to pay that money back. These are two-way transactions. Now Bill Gates comes and invests in India. That is investment, and if he wants, he can sell all the assets and he can go back. So basically Bill Gates is investing in India, and he can also disinvest from India. He brings $100 billion, invests. Later, if he is not happy, he can sell everything and he can take the money back. So money comes in, money goes out. So these are all examples of two-way transactions. So one way will come under current account, two-way will come under capital account. So this current account, we are further dividing. We are further broadly dividing into two categories. One category is referred as trade balance. The other one we are referring it as net invisibles. Under this trade balance, we will be having export of goods and import of goods. Only goods, okay? Trade balance, or it is also referred as balance of trade. Okay, BOT. So the trade balance or balance of trade will have only exports of goods, imports of goods. Under net invisibles, so you will have export of services, import of services, transfers, incomes. See, trade balance or balance of trade, BOT, that includes export of goods and import of goods. Okay, so only goods that will come under trade balance. Under the net invisibles, you will have export import of services. Okay, what is this transfers? This transfers will include items like gifts, grants. Okay, so gifts, grants, these are items. Transfers are the items which once given will not come back to us, or once received will not be given back to others. For example, President of India goes to Maldives, and President of India is giving some gift to the Maldives President. Okay, do you think that the Maldives President will give that gift back? Definitely no. See, gifts, grants, once given, it will not come back. Similarly, gifts, grants, once received, we will not give it back. Okay, so if you take grants, President of India goes to Sri Lanka and gives $100 million of grants. That is not loan. Grants are not loan. Loan means when I give loan, I will be receiving it back. Grants means I simply give it, that's all. Either I give or either I receive. Indian President goes to Sri Lanka and gives $100 million grants. That means Sri Lankan government will not give it back. Okay, so gifts, grants, all those will come under transfers. What about incomes? For example, now my brother is working in America. He is making money. Okay, he is earning money there. That money anyhow he will be sending it to our family. Right? Do you think my brother who sends the money to my family, will I give it back? Right? So similarly, for example, Guna has invested in America, and I have made some income out of it. I have invested in America. I have made some profit out of it. Okay, that profit I will bring it back to India. That profit I will not give it back to America. So incomes, the incomes may be because of employment. As labor you will be earning something, or the income generated using investments. Income generated using investments. Investments will come under capital account. Remember, investments will come under capital account. But these investments can generate some income, right? These investments can generate some income. For example, I am buying shares of a company. That is investments. Every year I will be getting some dividends. That is the profit, or that is the income which I am generating from the investments. I am buying a flat. That is investment. I can buy a flat, I can sell the flat. These are investment, disinvestment. But I can get rental income from the flat. That rental income is going to be just income. Okay. So the income from the labor, income from the investments, all these will come under current account. Okay. And if you take capital account, you will have external borrowings, external commercial borrowings, short-term trade credit, NRI deposits, foreign investments like FDI, FII, foreign investments like FDI, FII. So all these, it goes on, there are many more, this much is sufficient. All these will come under capital account. See, when I say external borrowing, here I am referring to the borrowing made by the government. The government borrows from other countries, or borrows from World Bank, borrows from other institutions, right? That one. Okay. External commercial borrowing, these are borrowings made by the private firms. Okay. So simply CurrentAffairs is borrowing from Microsoft, assume from America, from other countries. So all these will come under this external commercial borrowing. Short-term trade credit means these are loans borrowed for trade purposes in short term. Okay. So this is also a borrowing, but for trade purposes which are short term in nature. Okay. NRI deposits. Look, my brother who is working in America, he is sending money to the family. He is sending money to the family. That is not NRI deposit. That is just money transfer. That is just money transfer. But imagine my brother working in America, he is depositing his money in bank account in SBI. My brother working in America, he is putting his foreign money in Indian SBI branch, in SBI account. That means the NRI is depositing money in the bank. Maybe after 3 years, the money will be withdrawn. My brother, NRI brother, he will withdraw the money. So he is depositing the money in SBI. The NRIs who are depositing money in the Indian banks, they will withdraw that. So money comes in, money goes out. So NRI deposits will come under capital account. FDI, FII, these are investments. I already explained that investments. Bill Gates can invest in India and he can disinvest. He can leave that, he can sell the investments and he can take the money back. So put it simply, all the one-way transactions will come under current account. Two-way transactions will come under capital account. Okay. So now, in the context of India, in the Indian context, the trade balance, that is export and import of goods, this trade balance will be unfavorable. At least as of today, it is unfavorable. That means, trade balance means what? Export of, that includes export of goods and import of goods. So trade balance or balance of trade is nothing but 1 plus 2. Okay. You add 1 and 2, then you will have balance of trade or trade balance. In the case of India, it is unfavorable. Why it is unfavorable? Because our import of goods is very, very high. Our import of goods is very, very high than our export of goods. So this trade balance is negative. It is negative for India. With respect to net invisibles, it is positive for India because with respect to services, we export more. With respect to services, we export more. And also the remittances which we receive is also very, very high. So net invisibles is favorable. It is favorable for India. Trade balance is unfavorable. You have to understand that. So my trade balance is negative, my net invisibles is positive. What is current account? Current account will include trade balance and net invisibles. Current account is nothing but trade balance plus net invisibles. And if you add both, the current account is still negative. The current account is still negative because the trade balance is very, very unfavorable. The trade balance is very much unfavorable. For example, see, the trade balance, let us assume it is minus $200. Now the net invisibles, let us assume, is plus $150. So trade balance is minus 200, net invisible is plus 150, then current account is going to be minus $50. Okay, so our trade balance is very much unfavorable. Net invisibles, though it is favorable, when we add both, the current account has deficit. In Indian context, we are always having current account deficit, current account shortage. But when we come to the capital account, it is favorable. Capital account is favorable. So, current account in the Indian context is unfavorable. Capital account is much favorable. We are getting lot of NRI deposits. We are getting lot of foreign investments. Okay, so we will be having surplus capital account. So, capital account is surplus. So, what is balance of payment? Balance of payment is equal to current account plus capital account. I said current account, that is negative in the case of India. Capital account will be positive in the case of India. But you have to understand, current account plus capital account in the case of India is positive, is favorable. That means what? So for example, I said in current account we have minus $50. In capital account, assume we have $300 plus dollars. Favorable. Capital account is favorable. So finally, when you add, what happens? Minus $50 plus $300. That is going to be plus $250. So balance of payment is favorable. So in the Indian context, in today's context, balance of payment is favorable. Okay. Current account, that is having deficit. Inside the current account, net invisible will be favorable. But balance of trade is unfavorable. Balance of trade unfavorableness is very, very high, so that the current account in total is also unfavorable. But capital account, we are having surplus. The surplus is very high. So because of that, we are having positive balance of payment. Now, this positive balance of payment, this $250, will go and enter into India's Forex Reserve. So this will enter into India's Forex Reserve. Okay, this Forex Reserve, this is for a particular year. Last year maybe some more would have been added. Next year maybe we will be adding some more dollars. So Forex Reserve will be getting accumulated. It all depends on every year's balance of payments. So if your balance of payments is surplus, the surplus money will go to the Forex Reserve. And who maintains this Forex Reserve? The Reserve Bank of India. RBI is the custodian of this Forex Reserve. Okay, so for example, Guna is exporting something for which Guna is getting $1,000. That $1,000 I will actually give it to RBI and I will get rupees, because in India with dollars what I can do. So whatever dollars I am getting, I will give it to RBI, I will get the rupee back. Okay, just keep that in mind. But understand the concept. The surplus of balance payments will enter into Forex Reserve, and that reserve will be maintained by Reserve Bank of India. Alright, see, this is what I have given here. Balance of payment is a systematic record of all its economic transactions with the outside world in a given year. This transaction includes government transactions as well as private transactions. The transactions are classified into current account and capital account. See, what is current account? This is a single time and one-way transaction. Either receipt means money received. Payment you all know. So either the receipt or payment happens once and then the transaction ends. That is why it is one-way transaction. So this current account includes export of goods, import of goods. This export and import is called as trade balance or balance of trade. Then you will have net invisibles, under which you have services, transfers and income. See, here I have given the 2024-25 economic survey. I have taken this from economic survey, where what is the import cost, what is the export cost, everything has been given. You can go through. So finally we are having 1,79,143 crores of shortage. So my current account shortage is 1,79,000 crores. Okay. Now what about the capital account? We will see the capital account. Yes. So capital account, two-way or multiple transactions. So paid money will be recovered or received money needs to be repaid. This includes external assistance, external commercial borrowing, short-term banking capital, NRI deposits, foreign investments. There are many more. I have given some limited items, important items. So here if you see the capital account, the final capital account has a positive of, for 24-25 I am saying, positive of 3,78,659 crores. Okay, so it is positive. Capital account has positive of 3,78,000 crores. Current account Visa, it has a negative of more than 1.5 lakh crores. Now what is the overall balance? That is the balance of payment. That is plus 1,99,515 crores. That is going to be our final balance of payment, and this amount is what will enter the Forex. For 24-25, this amount will enter the Forex. Right? I hope now you got clarity on this current account, capital account, balance of payments, right? And also Forex. So now let us enter into this Forex. Let us try to understand this Forex. Okay, before that, balance of payment is nothing but current account balance plus capital account balance, and the balance amount, if it is favorable, that will be added to Forex reserve. So what is, see, all these notes I will be giving it to you. You can download it from the description by clicking the link. Okay. Now Forex reserve. So Forex reserve, I was saying that all the surplus will be entering a reserve called as Forex reserve. See, Forex reserve is nothing but a kind of bank account where all the surplus will be put in there. Okay. So this Forex reserve will be having foreign currency, will be having dollars, it will be having euro, it will be having other currencies as well. But we have to understand, not everything is saved in terms of foreign currency only. Inside the Forex reserve, not everything is saved in terms of foreign currency. For example, in your family, yourself, do you think that you will maintain all your savings as money? Some amount you will save as bank money, some amount you will be saving it as gold, some amount will be in the form of land. Like that, this entire Forex reserve is maintained in the form of four divisions. So one major portion of the account will be maintained in terms of foreign currency only. So one major amount will be in terms of foreign currency only. Another major portion will be in the form of gold. Another portion will be in the form of SDR, special drawing rights. I will explain that. Another portion will be in the form of reserve tranche. So the Forex reserve will be divided into four categories: currency, gold, SDR and reserve tranche. So currency you all know, nothing to explain here. Gold also you know, nothing to explain here. What is this special drawing rights? What is this reserve tranche? See, for which I have to explain IMF in detail. International Monetary Fund, you all know. IMF is an international financial institution which will help those countries which are suffering from balance of payment crisis. In 1991, when India was suffering because of balance of payment crisis, IMF was helping. Recently, Pakistan, Sri Lanka, they are suffering because of balance of payment of crisis. IMF was helping. Okay, so about IMF we will discuss later, or the topic will become very lengthier. IMF we will discuss later. Briefly, I will tell you. IMF is an institution which will help the country suffering from BOP crisis. Okay, BOP crisis means what? They are not having sufficient forex. They are not having sufficient foreign currency. India is a import dependent country. If I want to import something, I need dollars, I need foreign currency. If I do not have sufficient foreign currency, then that means I am facing crisis. Okay, so such countries, IMF will go and help. Now, if IMF has to help those countries, IMF needs money. So how IMF will get money? IMF will get money by the contributions coming from the member countries. The member countries, India, USA, okay, UK, all the member countries, they will be contributing money to IMF. Okay, IMF quota we will say. So put it simply, they will be contributing money. Now based on the contribution, each country will be given some amount of SDR. So SDR is something like points. Now for example, you go to a supermarket. So for every 100 rupees worth product you purchase, 1 point is given to you. Okay, so I go to Reliance Market, I buy for 100 rupees, they give me 1 point. 1 point is equal to 1 rupee, assume. So when I buy goods, when I buy something for 1000 rupees in supermarket, I will be getting 10 points. 10 points means 10 rupees. So next time when I go to Reliance, I can exchange the 10 points for a chocolate. The 10 points also now has a value. Similar thing is SDR. Based on the country's contribution to the IMF gives some points. That points also has value. Okay, so like how in the supermarket we exchange points for chocolates, like that a country can also exchange their respective SDR for trade purpose. So SDR is also considered part of Forex. Coming to reserve tranche again it is connected with the IMF. I said every country will be contributing money. There is something called as IMF quota. So every country will be contributing money to IMF. Member countries I am saying, they will be contributing to IMF. Now from the contribution, assume India is contributing $100. Now from that contribution, 25% approximately I am saying. So India is contributing $100. $25% that India can use during emergency. During some emergency situation, India can use a portion of the contribution. That is called as the reserve tranche. Reserve portion. Okay, so these two are connected to the IMF. So when we say Forex Reserve in India, it includes foreign currency, gold, SDR and reserve tranche. About IMF in detail, we will discuss later. Okay. See, so foreign exchange, that includes foreign currency assets, that includes gold stock of RBI, that includes SDR holdings. This SDR is also called as paper gold, remember paper gold. Then we have reserve tranche. So why we are discussing this topic in detail? So India's Forex Reserve has crossed $700 billion. So with this $700 plus billion, we can cover our import for 11.5 months. For 11.5 months, we can cover our import with this reserve. Say, for example, export is not happening only. Then with this dollars, with this $700 plus billion, we can continue our import for 11.5 months. This is the significance. In 1991, we had only $1.2 billion with which we were able to cover our import only for 15 days. But today, with whatever forex we have, we can cover it for 11.5 months. Right? This is the significance. This cover which we are measuring in terms of months, that is called as import cover. Import cover means what? So it is defined in terms of months. How many months a Forex Reserve can be used to cover our imports? That is called as import cover. India's import cover right now is 11.5 months. Okay, out of $700 plus billion, in terms of foreign currency, we maintain around $587 billion, gold around 92, SDR 18 billion, reserve tranche $4.7 billion. Alright, got clarity? I hope it was crystal clear for you. Please give your feedback in the comment section. Now an interesting exercise. In the previous video also I gave this exercise. See, we have discussed in detail. I can give you a question and I can ask you to answer. But I want you to construct a multiple choice question. Okay, in the GST video also I mentioned that, but many were constructing mains question. Construct a prelims question. When you are setting a question, your conceptual clarity will increase. I will solve. Let others also solve. Okay, everyone who is watching this video, with this content, try to set a UPSC standard question. Let everyone solve. I will also choose the best question. Okay, instead of me sharing a question, I would suggest you to set a question. I will go through every question and leave my comments. Okay, right friends, I hope you like all our initiative. Please watch our other videos as well. Please follow our Telegram channel where we have started PYQ based guidance initiative, which is a part of free learning, which you can come and participate. It is for both GS and CSAT. So I will see you in another economics explained episode. Till then, bye. Take care from Guna Mathivanan.